This conference will now be recorded.
All right, with Julie's, we are going to be combining now some correcting entries with our adjusting entries that we just finished in our previous example with the boats R Us. So this is number 8 and 9. And another difference is, instead of giving you opening T account balances, I give you the opening unadjusted trial balance. So it's your duty to take these numbers and put them in the correct spot into a T account sheet. What that's going to do is allow you to then to update your T accounts with all the adjusting and or correcting entries that we will have in Julie's. We will have 8 of them this time. So at this point, you need to pause the video and make something very similar using all of these balances, make something very similar to what I have here. So 12,000 was my opening cash, 2,000 for my AR for Ryan. So I'm going to go through and update my T accounts as they should be with their correct balances. Remember the accumulated depreciation, that's a contra account. So we'll want to come down here for the accumulated depreciation and put it on the correct side. And then when you're all done putting in your T accounts, you may want to check to see if you have put them in right. Here are the balances that you should get for all of your assets, and then your liabilities, owner's equity, revenue, and expenses. And then what they total here is in fact 32,600. So it's kind of a extra insurance that you have put them in right, because if you don't have these beginning ones right, of course the rest of when we finish up, they won't balance either. Okay, so what we're going to do is with these, at this point, you should have the video paused if you do not have all of your T accounts up to date before we start in on number 1. All right, with number 1 and number 8 are the 2 correcting entries for this example. Everything else in the middle are adjusting entries, and I'm going to expect that you can begin to do those on your own using your notes from the boats example. But I will help us through on number 1 and number 8. You should have already watched the video on the correcting entries and how we need to do 2 sets of entries. We need to have an undo entry to undo the wrong item, and then do a correct entry as our second entry to do what should have been done. All right, so also let me point one more thing out. If there's ever a mistake when we are doing correcting entry examples, there's nothing on this one that's weird, but when we get to the third one, the Dr. K example, there's going to be some numbers in the wrong spots because of the errors. So it could be that we had a supply expense over here of 1,200. You should begin to know by now that expenses do not have a credit balance. They should never be over here. And if they are, then that means a mistake was made. So if that's the case, we still want to put it in as it's given to us, knowing that we're going to have a correcting entry coming up. All right, so let's go in to do this first entry. It says we get paid, but we're not going to do the job until January 10th of next year. So we were paid on the last day of the year. So this is not considered an adjusting entry. Cash will be involved. We are actually having to do a correcting entry. Correcting entries can involve cash or may not. Who knows? Usually we find that an entry was an error when we go back and do the bank rec. And we'll see how to do a bank rec much later in the semester. But that's how we would normally find an error was made, or by just simply looking at the trial balance and noting a balance is on the wrong side. All right, so how she did it, because if we look at this, she received a payment of $2,500 for work to be done next year. That should be, what did we get? We got money, cash, and we're going to credit that we owe her a service, unearned revenue. However, she debited the correct account, cash, but she forgot that she didn't do it yet and just put it into revenue. So it makes the revenues too high. So we need to undo this entry, just undo it in full. And we need to think about off to the side. This is what I would always do. Off to the side, put what was her wrong entry, just so we can have a visual. Her wrong entry was $2,500, and she had credit to service revenue of $2,500. So that's just kind of off to the side in a bubble. This is no way in part that we want to have this in our real answer. This was the wrong one. We don't want to compound our error by making two wrong ones. This is just for us to visualize. So when we do our first entry to reverse this, it makes it a lot easier. I'm going to debit my service revenue, pretend that didn't happen, and credit the cash and pretend that didn't happen, and then we'll start over. So that's what we're going to do in number 1. We're going to debit our service revenue, pretend it didn't happen, and then credit my cash, pretend it didn't happen. And then when we get down to number 2, our second journal entry, we're going to do what should have been done. What did we get? Yep, we got cash, so let's put that back in. Yeah, it kind of seems like it's an extra step, but trust me, I believe it will help in the long run if you do it like this. You'll get less confused. And then credit, why did we get the cash? Well, we got it for a job we're going to do at some point later. So we're going to credit our unearned revenue. So now we need to go in here and update my T accounts. Okay, I debited my service revenue. This is the only time we will ever have an entry on the debit side of the revenue. You'll notice in your T accounts, this is always grayed out as a no. Well, the only time you're allowed to put something in here is if you made a mistake and you need to take it back out. So that's the case here. We made a mistake. We need to take it out and take out our cash to start over. Then put the money back in cash because that's where it belonged. We had that correct. And simply come down here and make a new unearned revenue to Sears. Do not add it to Bistro's account. It's a common mistake. I don't owe Bistro $3,500 of services. I owe them $1,000 and I owe Sears $2,500. So make sure we have a separate T account. You can mark out the notes payable, or you can come into the middle and update your unearned revenue. So that is how we would go about doing a correcting entry. Now, I go ahead and pause the video and do steps 2 through 7. We will go through them, and then I'll have you try number 8 on your own as well, a correcting entry, and I'll go through it in more slow. Remember, this was just off to the side, so I'm going to get rid of it at this point because I don't want that anywhere on my answers. Go ahead and pause at this point. All right, we're going to go through numbers 2 through 7. These are all of our adjusting entries. No cash should be made or entered in for 2 through 7. Julie last paid her employees on the 14th. She will next pay them on January 2nd, but they will have worked between the 14th and the 2nd. So we need to show that they've worked. It tells us that they have earned $1,500 through the end of the year, and then with their holiday bonus, they will get $1,800 on payday January 2nd. This $1,800 is extra information as of December 31st. I don't need to know this to do the adjusting entry. Now, I'll need to know it next year on January 2nd, but for December 31st, I technically don't know that yet. So on the 31st, this is all I'm going to use to show that wages were earned and that I owe them the money. So let's go to our journal entry number 2. To show wages are earned, remember that is a wage expense. I need to debit my wage expense. And I need to credit my wages payable to show that I owe my employees money. My journal entry, debiting my wage expense and crediting my wages payable. Okay, number 3. Always pause the video if I begin to go too fast. But there's no need for a lot of dead space in a video when you can simply pause. Julie's equipment has useful life of 10 years. She depreciates it straight line basis. That's all we've done so far, so that is standard. This is the third year of the equipment's life. Let's go back to our original trial balance and see if that makes sense. If this is the third year and we depreciate it on a straight line basis, that's $1,500 a year. Yeah, that makes sense because this is the first 2 years. I had $1,500 for year one. So think of 1,500 plus 1,500. Year one and year two. That's where this came from. Now I'm ready to add in year three. Notice down here there is no depreciation expense because, as I mentioned in the prior video, revenues and expenses, and then as we'll see as well, dividends get closed out. So at the end of last year, they become zero. So it's not here yet. We need to add it. So we need to tack on another $1,500 to show that my equipment was used. So I need to add a new expense to my expenses, depreciation expense, and update my accumulated depreciation. It's no longer at 3,000. It's now going to have a total of 4,500. I can then come up here and do my adjusting entry, my journal, on my journal piece. $1,500 debit to my depreciation expense, credit the accumulated depreciation. Okay, number 4, Julie finished up her project for Bistro. We've already looked at this. We already saw that we owe Bistro $1,000. She has now finished it, so she doesn't owe them anymore. So our debit question, what did the business get? We got a reduction on what we owe. And we got a reduction on what we owe because we finished. So I can now show my T account. I debited my unearned revenue to get this to zero, and I'm going to update and increase my service revenue by $1,000 because that job is done. I've now earned the money. Cash wasn't affected by this transaction. Cash was already paid a long time ago. Remember, unearned revenues are like gift cards. So I'm going to debit my unearned revenue, credit my service revenue. Number 5, final count of supplies shows 1,300 remaining. Okay, let's go to my supply account. I started out with 3,300. I only have 1,300 remaining. So that means I used $13,000 of $2,000 of supplies. Let's see if I already have a supply expense. I do. I already have 1,200 in here. I'm going to now tack on another 2,000 because that's what I'm showing here as an adjusting entry of how much is now gone out of my supplies. So what did I get? I got the benefit and the use of these supplies. They're now done. I've used them. Just like work, the workers have already worked. And I need to come over here and show that I got rid of the supplies. I only have now, if I would total this, $1,300. I can come up here now and do my journal entry, show my supply expense, and credit the supplies. Okay, 6 and 7 are very similar, both dealing with prepaids. I tried to put a little extra information in here to number 6 to make it more realistic. And usually when they're more realistic, they become a little bit more confusing. And that's pretty typical. So it says here that we spent $3,000 in November, but $800 of it was used as an expense in November. So we're not going to find $3,000 in our prepaid insurance because I've already used some of that $3,000. So what I should find in my prepaid insurance is $2,200. That's what I have. Now, my insurance expense isn't going to necessarily be $800 because that's just what I put over here and updated my insurance in November. Whatever happened in October, September, I don't know, but obviously that there was an extra $1,200 already in there somehow. Because remember, all the balances I give you were the end of the year balances, but not including the adjusting entries. So for example, this 12,000 in cash, there's more than one entry that came in for cash. That was just the final balance. Same with the insurance. Yeah, we had 800 in here. I know where some of it is, but the other 1,200, I don't know. It doesn't really matter to me. Somewhere in the previous months from October back. So we're ready to update now our insurance. It says another 800 needs to be used. So I go up here to my insurance expense, add in another 800 that I got the benefit of, and take away 800 out of my prepaid account. So now I only have $1,400 of prepaid insurance remaining. My second one dealt with advertising, and it said I used all of it. So all of the advertising, I didn't have an advertising expense already, so I needed to create a new one. So I got the benefit of advertising and come over here and credit the 1,100 to show I have nothing left in my prepaid account for advertising. Now I'm ready. I can do my journal entries. Show that I got the use of insurance and advertising, and then credit where it came from, their prepaid accounts. Okay, number 8, our last entry, and this is also our other correcting entry. And I know that when it tells me here an error was found. We wrote a check for $800 to pay on our Julian account. However, we recorded it as $1,800. So off to the side, and you highly recommend doing this, not on your journal paper, just on this sheet, right? Put in what the incorrect entry was, so we know how to flip it accordingly. So we did it, all the accounts were correct. So when we write a check to pay on our Julian account, we're going to debit our accounts payable to Julian. What are we getting? A reduction on our account. And I got a reduction, and I wrote it originally for $1,800. Of course, that was incorrect. And then why did I get a reduction? Because I paid cash. So this was the wrong entry. Now I need to go to number 8 and flip it and then do the correct entry. Okay, so number 8, I need to undo what I just kind of visualized. I need to show, okay, let's put $1,800 back into my cash temporarily and put $1,800 back on Julian's account. And then let's do the entry as it should have been. What did we get? We actually only got an $800 reduction to our Julian account because cash was only spent of $800. And then I want to update my T accounts. I'm putting $1,800 back on, so temporarily I really owe $2,100 at one point. Put that $1,800 back in my cash, and then do what it should have been done all along. Take out $800 and only take out $800 from my cash. So at this point, you are ready. You need to go ahead and total up your T accounts. Notice cash does have entries this time because not all of these were adjusting. Some of them were correcting. Total up your T accounts, total up your accounting equation, and then make the adjusted trial balance. I will show those answers here in a few seconds and to see if you did it correctly. So pause at this point, and then let's see how you did. All right, here are my totals. Some of the bigger ones here, cash, potentially my service revenue, ones to check to make sure you did correctly. At 13,000 ending cash balance. Remember, this one was it's a negative. So we had 15.5 total service revenue. Remember, drawings are contra accounts. So when you're getting owner's equity, we had 22, but we need to subtract out because it's on the debit side, this 2,000. Because a debit is actually a negative to my owner's equity. And when you add up all of these, it does equal my total assets of $28,200. So the final step then is making the adjusted trial balance. Hopefully you've done that, but if you haven't, pause. And then let's put all the accounts in order with their correct totals on the right side, on the correct side, and then make sure our debits do equal our credits. Okay, so I got my appropriate title, company name, what it is I'm working on, the adjusted trial balance, because I've completed my adjusting entries. The date for this year only. And then notice this is another way, instead of putting your totals onto the T account paper, I do allow you to put them out here to the side of your trial balance if you wish. Just another option. Okay, so this time I just did it a little bit differently. I just spaced each one instead of putting a space in between each category. I don't know why I had done it like that. Continue to do it however you feel most comfortable, putting all the assets and then skipping a line to liabilities. I think that probably works best. So I've got all of my 100 accounts, all of my assets, liabilities, all the way down to having my expenses last. Check your totals, make sure your totals match mine. And then your final debit and credits should have been $48,800. You will need to bring this adjusted trial balance to class on week 4. We will be using this to practice our closing entries. Just bringing this trial balance, this is not an adjusted trial balance. This is your unadjusted. These have all the wrong numbers. Notice cash is $12,000 in this example, but in our updated example, we actually had a different cash balance, $13,000 with the corrections. So this is what you need for class week 4 as we look at closing entries. With that, we will wrap up this video and we'll have one more for Dr. K.